Sanjay H Parekh joins in from Sohum Asset Managers to talk about what he's making of the market. Sanjay, hi, afternoon. Are you feeling any discomfort at all when it comes to the market valuations and levels?
Yeah, I mean, we are not cheap at all. I mean, if you take earnings, see, earnings have been benign. We had a very weak Q4. We've yet to get the preview for all the sectors, but I think Q1 also is quite benign as I see initial estimates of some of the sectors, not all sectors previews out, but on a bottom-up basis also we see that Q1 will be quite benign. And it could even percolate to Q2. Overall economy also, as you see, you take IIP, you take any of the core industries, the growth rate have been quite tepid. So credit growth also is less than 10%. So here is a case where a bottom-up, I mean, our economy is benign, but the balance sheets are very, very good. So be it the government balance sheet in terms of risk, or the balance of payment, or the RBI balance sheet, or the banking balance sheet, or the corporate balance sheet, and household balance sheet. So household balance sheet, of course, at the top end, mid and the top end. So balance sheets are good. Rate cuts will help to revive the economy, but we are yet to see growth. So I think this could be a very slow recovery. I don't expect even Q2 to have a better recovery, and very possibly because of the rate cuts and the tax benefits, Q3, Q4 onwards, we should see recovery in earnings as well. So that is where we are. But even if you take, next year earnings at which are consensus for Nifty at 1300 to 1320, I don't think India deserves more than 20 times. At least I've seen that about 20 times outperformance in the next 12 months is much less. So then we are talking of 4-5% return from here. So I think we will have a time correction and a price correction for sure is what we believe.
All right, Sanjay, but I'm sure that you must be betting on some bottom-up stories. So help us understand that which themes are looking good to you right now, and which themes do you believe are reasonably valued at this point in time?
Yeah, so even our portfolio is, I mean, stocks are not cheap, I'll be very honest. Of course, when we bought them, they were reasonable, and hence we do trim also where we think it's getting overdone. Uh, but our whole construction is around being domestic overweight, global underweight. So we are almost zero on oil and gas, zero on FMCG, which is domestic, but their growth is missing. IT, we are underweight. Pharma, we are mild overweight. And then we are overweight on discretionary, we are overweight on financials, mild underweight on banks, but overall overweight on financials because our NBFC and capital market exposure, we are overweight there. And then what we've done is telecom, we are overweight with Bharti. Real estate, we have the largest player, DLF. Consumer durables, we have Polycab. And in EMS, we have Sirma. And then port, we have Adani Port. So this is where each of the sectors may have got leaders or niche, I mean, largely leaders at reasonable valuation and where we are comfortable with growth. So that's how we are positioned, and our average price earning of the portfolio is still 15 times on 27, which is at a good discount to Nifty, and ours is a large cap dominated portfolio with 72% large cap.
Okay, so that's a take on the stocks that you hold, Sanjay, as well as the sectors that you're liking. But also help us understand with the kind of sector churn that we're seeing in the market. You have a new sector that's gaining on a weekly basis. In the near to medium term, which sector do you think could outperform the others and could emerge to be a winner in terms of the sectoral moves?
So it will be, one is near-term rotation. We don't focus because, you saw IT suddenly doing well and then again underperforming. But on a 3-year basis, IT is still underperforming. So we don't focus there. But what we do is on a bottom-up basis, themes that we like, maybe, the renewable space where we have one of the largest, like JSW, who's good, is a good representation of how they will benefit in renewable. or recently we participated in the solar pump, one of the new IPO that we had, where we think that there is a clear growth runway for growth and possibly a longevity of growth as well, and they are reasonably valuable. EMS is one theme that we like, and we participated through Silma. Consumer durables, Polycab is now not cheap. We hold it, but when we bought, of course, it was better, much comfortable valuation. But that is one area where I think you will see better growth. Telecom, Bharti is what we like. And in capital goods, we have a company in prefab which is growing quite well, which is Interarc. And then, of course, the largest player, Larsen & Toubro. So that's the way we are positioning on a bottom-up basis, where we think that in a low-growth environment, which are the companies which will grow in a better way, hopefully, and that's how we are, that's how our portfolio construction.
Well, it seems to be pretty much a mirror image of yesterday, because the Nifty has fallen about almost 200 odd points from the session highs, and almost a 380 point fall coming in for the Nifty Bank as well from the peak of the day, and pretty much a similar story like yesterday. But Sanjay, just in continuation to the sectors that you were highlighting where you see growth visibility, I guess the first litmus test is going to be come mid-month when you will have earnings come by. Where is it that you think the disappointments will persist, and will IT be one of those sectors?
So, no, one positive is that the expectations are quite low as we start. So while let's start with IT, where they're already guided 1 to 3% for most of them. So what could be the further disappointment is what we to see. But larger caps, barring Infy, I think there are still going to be disappointments if you take constant currency dollar revenue growth rate. But if you extrapolate that, what will happen to this full year? I don't think there will be big downgrades from already. They have already been downgraded. Similarly, in auto, the clearly demand is low. It is showing up in monthly numbers. Of course, some of them are done better than the rest, but overall segment is at least is benign. So that is again expected, and I think global investors obviously would know that this year is a year of low growth, and hence they don't look at this year, but at 3 years, and we also look at it. It's just that if it gets prolonged, then then how are we reasonable valuation? That's where I think we're not, and that's where we need to buy them much reasonable. And so a lot of sectors, even banking, you will see very, very benign growth rate. NBFCs selectively will do well. Capital markets will do well. Telecom hopefully should be better. Ports should be okay. And then pharma should be neutralish. But I don't think by HPCL, BPCL are advantageous gains. So, they are not recurring where every quarter they're going to do well. So barring that, I don't see even FMCG, the preview doesn't show any enthusiasm. So I think it's going to be a very benign quarterly season, which is fine. But if the outlook for Q2 is again weak, then I think, then I think market is yet to factor those pause. Maybe we should pause, or there could be a time correction or price correction is what we feel.
All right, but Sanjay, investors are also waiting for the trade deal to happen, and well, of course, all eyes on that. But any sector, do you believe that must be a beaten down name at this point in time, given the fact that when these announcements were through, there were so many export related sectors that got hammered. So any spot where you are finding opportunity, maybe pharma, chemicals, or some of the export related plays within the tire companies, if you want to really go into minute details and allocation there?
Right, that's what you meant. The deal we would do with US. You're trying to say how do we position that? That's the way. That's the question you have, right?
Okay, any sector in focus where you believe that when this deal is through, the optimism can once again be back and the sectors can react to that?
No, I think, markets have been quite, see, you never saw negative reaction when this was in progress. So I think, market has been watchful, saying that hopefully this should go through. There could be some possible positives or negatives, but at least we've not thought that way. I mean, IT, we don't believe is going to get affected. Other than that, I don't think sectorally any big changes. Of course, auto we need to watch because it's a large exposure. It's not only US, it's what happens across bilateral trades because we have exposure to ancillaries into Europe. There could be second order effect. So we need to watch not only India, US, but what happens to Europe, US, what happens with other counterparts. So we need to really watch before we take a call, and hence we're not taking either side a call based on. Earlier also we did not take, and today also we're not going to.
Sense. Okay, Sanjay, great to have you on the show. Thanks as always for your insights. Good speaking with you.
Thank you. Thank you. My pleasure.